Hello, everybody. It is 4 o'clock on Wednesday. Seems to be the magic hour, and people are starting to join us. We're very happy that you could make it this afternoon. I'm going to just give a minute for everybody to kind of get on there and participate. So just hang on about 30 seconds.
Heidi, are you able to monitor the chat room?
I am, Susan.
Thank you.
All right, we're gonna give while we're waiting for everybody to log in, let me tell you where you are and who you're talking to. This is Heidi Pickman. We're live from everybody's home for our nuts and bolts of SBA economic impact disaster loans. I want to thank everybody for coming on the call again. I know when we had this event last week, we were a little bit overloaded and people didn't get to ask the questions that they needed to ask. And we also have a little bit more information than we do now. So that's good. So we rescheduled a call just for you all, our TA providers and microlenders and CAMEO members, so that you could really understand how to help your clients get an economic impact disaster loan, and see if it's actually the right solution for them. Today we have Susan Brown, who's our microlending specialist here at CAMEO. Many of you have probably met her along the way, and if you haven't, she's a wonderful facilitator and does a lot of our programming that surrounds microlending, as well as Mark Quinn, who is the ex-San Francisco, former, I shouldn't say ex, right? Former San Francisco district director for the SBA, as well as he's been working with CAMEO for the last 2 years as a senior advisor and knows these programs well. So, and I am going to turn it over to them. But before I do, we have 70 people on the line. So we usually do introductions, but we're not going to do that. I am going to ask everybody to type your name and your organization into the chat room for me. The chat box, so you know, is if you take your cursor and you bring it all the way to the bottom of your screen. You guys are all probably pros at this by now, because Zoom has obviously become one of the tools in our toolbox. You will see a little chat icon, which is like those bubble things that come out of cartoon characters. And it seems like a lot of you have found it. I will answer someone's question. Ricardo asked if I'm a provider, is this webinar for me? Absolutely. We've got Bob from SBDC. The presentation will be available afterwards. We are recording the presentation, and we will post on our website as well as send it out to everybody who registered. Swan from Pays, Vinicio from El Pájaro, Carla from Main Street Lawn, Centro's here, Women's Economic Ventures, ICA's in the house, Lamas, Northside Civic Development Fund. Some of you, if you don't know who CAMEO is, I suggest you make sure you get on our mailing list. Ron from Asian Pacific Island Small Business Program, Kern Community Foundation in Bakersfield, 3Core. I'm not going to be able to read everybody because there's 76 of you on the line, but good to see you all here. Hi, Meshe. Hi from Buffalo. Hi, we've got a few people on from Pace and El Pájaro. Want to thank all of you for joining us. For those of you who are small business owners, I see there might be a couple of you on the line. This is a webinar that is geared to the people that would help you get these loans, and I ask you to let them do most of the ask and most of the questions. So without further ado, I will hand it over to Susan. We are one more thing. We are in this webinar. I think it's about an hour, but we will stay on for an hour and a half if we need to answer questions. Want to make sure you get the information that you need. Susan, take it away.
Okay, yes, thank you, Heidi. This is Susan Brown. And as you can see there, this is who's on the line with you from CAMEO today on this webinar. Heidi Pickman was just speaking. I'm Susan Brown. I've been doing a number of things, but the microlending and CDFI development programs, and Mark Quinn is our senior advisor with a long history with SBA programs, who is our subject matter expert today. What we're going to be going over in terms of the economic impact disaster loans is some eligibility requirements, some underwriting considerations, documentation requirements, and general guidelines for working with clients. So in addition to providing you with information, we've also created a worksheet that is just a quick and dirty way to maybe start getting you in the ballpark for knowing how your clients will qualify for these loans. And just today, we also got some information about what might be coming down the pike policy-wise for this program in just short order if it gets passed through Congress. So as soon as we have definitive information on that, we will hand that off to you as well, because it could change a number of the things we're telling you today and actually loosen up some of the requirements. So now it's not advancing. Excuse me, everybody. I'm going to just move to this modality. Sorry about that, just to make sure we are moving forward. So what Mark mostly has provided the content for this, a quick screening tool and information for TA providers to use for SBA economic impact disaster loan interviews with clients. We're in a very fluid and unprecedented moment in our country. There are lots of proposals that are being discussed and run through in DC at the federal level, and the guidelines and criteria we're presenting today may change, and we will give you that information as soon as we can. So what I'd like to do is turn it over to Mark at this point, and Mark, have you just talk through these slides, and we will have plenty of time at the end for questions. So do you mind starting, Mark? We're on slide 3 or 4. Are they eligible?
All right. Thanks, Susan. I appreciate that. First off, thanks for all of the nonprofits that are part of the CAMEO network out there. What you all do every day is, pretty amazing. In my SBA time, I always referred people to you, and I was always really a great admirer of all the work that the nonprofits are doing. If I was so good at it, I would have noticed from the very beginning that the economic impact disaster loan should be the economic injury disaster loan from the headline start, but I didn't pick up that typo. Let me go through a couple of things. I want to reinforce Susan's point at the beginning that there's a lot of things that are in flux. Today, I'm sure that many of you have seen something on the CARES Act that is going through, and probably will pass today. There's a number of things in that will affect the way in which your clients are going to be assisted, and you're going to get a lot of inquiries on that. And as Susan said, we will, once all of that gets sorted out, we will do other further webinars to make sure that we can explain how that would work, because you're going to get lots of questions from people on that. But I'm not going to dwell on that piece of it. Let's set that aside. Currently, the SBA Economic Injury Disaster Loan, EIDL loans, are ones that are being accepted by the folks online. And I would say to everybody, assume that online is the way you would want to talk to your clients. One of the things that SBA does in economic injuries or any kind of disaster is that when someone is in need of assistance, some counseling advice, some understanding of how the programs work, SBA refers people to what we call our resource partners, SBDCs, Women's Business Centers, sometimes SCORE, other organizations that are part of the network that provide technical assistance. And when those clients come to you, many times they are going to be asking for things that SBA thinks is about how to help their business understanding of what they should do. In my experience, the practical matter is they come to you asking how I can get a loan. That's the reality of what people are coming to. And the disaster program really doesn't want resource partners to be doing loan packaging or really advising about how SBA lending works specifically, disaster lending specifically. And part of the logic of that is they don't really want SBA partners to be really getting into the nuts and bolts of how disaster lending works. So they typically are hoping that we all, refer people to the online application, submit applications, and then wait for a disaster loan officer, typically in Fort Worth, which is where most of this is done, gets back to the client with answers about whether what they've submitted is correct, whether they are eligible, and whether they can be approved. The reality, though, is that the uncertainty for small businesses in that circumstance really is unfair to them. And for what they need really is kind of a quick assessment that you can provide to them to give them a sense of whether they are in the space that is most likely to get an economic injury loan. This applies to all disaster programs, but specifically this is only about economic injury, which is what the coronavirus disaster is about. So what we're trying to do is to kind of walk people, if I was a TA provider, what I would do is walk people through an understanding of what it is that you can give to them as an understanding of the program that doesn't get too far into the weeds, because you can get deeply in the weeds on this, but gives them kind of an overview of how the process works and whether they're in the space that really is for the economic injury loans. So I kind of want to kind of walk through each of these pieces. There are some of these pieces that are already going to be overtaken by changes in the way the legislation works. But let's just go through it as it currently exists. And this is the way the current disaster loan program is working. If you submit somebody online, if someone submits an application online, this is the process that would apply to them. So the couple of things to first do is somebody an eligible business? And usually there's a couple of criteria that are used. When I say all California counties are eligible, really eventually all of the United States is going to be eligible. I think that's going to be a part of the legislation, but certainly all of California is eligible. Are you a small business? And that really, are you a small business, really fits into the easiest the way to think of that is if your business has average annual sales of less than 8 million, or if you're a manufacturer with less than 500 employees, you would be a small business. Now, if you're larger than those, there's categories that apply, but as a rule of thumb, most of the TA providers that I've seen and worked with see clients that have less than 8 million in annual sales. If it's more than that, then you have to look more specifically, but that gives you probably 95% of the clients fit a small business. The credit elsewhere test is something that's going to probably get overtaken by legislation, but basically that says that you, as a small business applying for an economic injury loan, can't really have cash reserves that are adequate to keep your operations going. And in most cases, it doesn't really apply to people. So most people satisfy that test without too much of a problem. It is the case that you have to have a green card or a legal immigrant or a citizen. And there are some ineligible types of businesses, churches, casinos, cannabis, which is specific, that you should be aware of in California. While it's fine for California, it's not something that works for federal programs. Pawn shops or porn. So basically, my rule of thumb on it is we can't make loans to the saints or the sinners. So that's kind of a criteria that probably will stay the same even when the changes in the legislation come through. Can I get the next slide? There you go.
Wait, Mark, can I ask a clarifying question on that?
Certainly.
Mm-hmm. The credit elsewhere, I didn't understand what you said about legislation coming through.
Yeah, in the CARES bill, that's going to be eliminated for the time being. So that won't be a problem. But okay. So that's something that you should not worry about. Again, it really only applies to, in the normal world, it really only applies to businesses who have significant cash reserves or personal net worths that are so high that people have an ability to pay to keep their business operating without a disaster loan. So if you are a significant high net worth person and you have adequate cash reserves, and it's clear that from your personal financial statements that you don't need a disaster loan, SBA wouldn't make a loan to you. But that generally doesn't happen. You don't get people coming in that are very high net worth people or businesses with significant cash reserves saying they need a disaster loan. So usually for the clients that most of the TA providers serve, that's not the situation that most of them face.
Okay, and then what about LLCs owned by undocumented persons?
Good question. I think some of that is going to be case by case. I would, in other words, a corporation that has ownership by an undocumented person, the eligibility still will go back to the person.
So that's a no.
In other words, yeah. In other words, if the business is owned as a partnership or a corporation by someone who does not have a green card, essentially, then that would be something that would not meet that criteria to be eligible.
Okay.
But I would also say, and this is a caveat that goes along with everything, is that in every case, if there's a question, someone should apply. And if in applying it turns out that they are deemed not eligible, let that decision be made by the SBA Disaster Loan Office. Don't take the expectation of a no as the case. Make the case that apply and see whether that turns out to be the case. So everybody should apply if they think the circumstance of economic injury applies, but may or may not, in these kind of cases, may or may not apply. You may or may not be eligible.
Just so everybody knows, we are getting a few questions in the thing. I'm going to hold some of these questions till the end. So
do we skip a slide there, Susan, to skip back?
No.
Okay, good. All right, thanks. Two things that people get confused about, whether they're eligible and whether or not they meet the loan qualifications. And that usually falls into the category of whether the business has the underwriting criteria that SBA looks for. Generally, I think what you should keep in mind is this is the rule of thumb that the disaster people work with, and it's not a fixed one, but in general, what people should realize is that you have to have decent enough credit history to be able for SBA to make a loan to you, because there has to be a sense that SBA has that there will be the probability of repayment. And so where that comes into play is where a business has no very recent bankruptcies or has reasonable credit scores and especially does not have any federal delinquencies on things like SBA loans, child care, student loans, things that are defaults on all of those are problematic. Again, in any of the cases that the problem is about the applicant's credit, whether this should not be something that you should tell people that because you have had a bankruptcy, you would not be getting an SBA loan. Because many bankruptcies are based on circumstances that SBA can look at and say, we understand that the reasons for that were not because of your business problem, could have been a family problem, could have been a medical problem. So I would say, again, make sure that even if you see someone who has credit problems, that you don't dissuade them from applying. It may be the case, you should let them be aware that that could be a barrier, but you should not tell them that they are not going to get an SBA loan because the circumstances, again, circumstances unrelated to the disaster. The circumstances are ones that are case by case.
And Mark, this is Susan. I did put on there, I recommend many small business owners and people in general haven't looked at their credit report in a while. It's probably and don't know exactly what's on it. Everyone has access to free credit reports at least once a year. We think it would be great for you to pull a credit report before sending in the application to help and review it with your clients.
Yeah, really good advice for any of the TA providers, to tell folks, did you pull your credit? You should do that. That's a sort of baseline that you should always start with. Okay.
I have another question coming in about the credit score.
Mm-hmm.
Will SBA check score through their own scoring system, which is minimum SBA score 140 for SBA loans? And
No. We're not doing that.
And
So you should also, yeah, that credit score is what's being used for 7A loans. That's not what's being used here. So I would say again that that reasonable credit is something they should have. The credit score is below 600. I think that basically what you're looking at is a screen level that above those levels people just assume credit is okay, and below those levels credit has to be reviewed specifically. So on this one, the further piece, I think I actually skipped ahead a little bit, that on the credit story that you should have no federal defaults on SBA loans, student loans, child support, no tax liens. Again, if there are workout plans in place or if there's a story that's appropriate to be brought forward, bring that forward as part of the discussion.
Yes, and for those who don't have training or as part of your practice to look at credit reports, these kinds of things will show up in a certain section called public records on the credit report.
Mm-hmm.
IRS tax liens or any local, state, or federal tax liens is a question.
Yeah, those will all show up as Susan says, and in every one of those cases, what you're wanting to do as a TA provider with your client is really get into the discussion of whether there's a workout plan in place and whether that is something that that the client is actually prepared to be dealing with. Eventually, it's going to be the case that if you have public tax liens or public defaults on any of these categories, you do need to get those worked through as part of this, because those are kind of threshold issues to getting a disaster loan. So part of this is really assessing where they are and then talking about how they can get into a workout plan. So further underwriting guidelines, skipping back one.
Sorry. Go ahead.
So one of the things that's a fundamental thing that the disaster program looks at is the ability of a borrower to be able to have the capacity to handle additional debt as part of an economic injury disaster loan. There's the debt service there, plus the debt service that they have on existing credit is something that SBA will say if the cash flow of the business is not able to take into account additional debt in addition to the existing debt they have, SBA would not be able to make an approved economic injury loan. In other words, if you can't pay your existing debt, even if you get an economic injury loan, if you can't pay your existing debt, SBA is not going to be able to approve an EIDL loan for you. So that's one thing that you should be aware of as a TA provider, is to look at what the debt burden that client already has, and that's really kind of a debt capacity question, and that becomes the limiting condition to what SBA can approve additional credit, is if they can take on additional debt. And so you really want to take a look at where they stand, and this becomes an issue sometimes with borrowers that are cash businesses, because getting a sense of where they are as far as their tax reporting information, or if the business is very aggressive in writing off all of their operations in a way that shows really no profits, then you run into a situation, this is not just on disaster loans, but all loans, you run into a situation where it's difficult to make the case that there's cash flow available to service additional debt if there's really no cash flow that shows beyond just their current operation. So that's a key piece to keep in mind.
And we do have a little bit of a worksheet we'll show after the slides are done to help you with some of that calculations.
Okay. The loans over $25,000 require collateral. I think that's something that you will see will change, that will be dropped. And personal guarantees are required. And I think, again, what I understand that will probably also be dropped with the CARES bill, but not to get too much into that. But in the normal SBA disaster world, loans over $25,000 require collateral. It doesn't mean that if you don't have collateral, they can't approve the loan. it's essentially if you have collateral available, it should be pledged. And so you should tell your clients, again, in a normal disaster circumstance, you should tell your clients that if they have collateral over 25, if the loan is over 25,000, they have collateral, it would require it to be pledged. If they don't have collateral, then that's okay. It's not a problem, but just keep that in mind. And then it is, in a normal world, it's personal guarantees are required. So keep in mind that, that would be the case as well. Okay, so we kind of want to go through a little bit. The second piece, sort of the first piece is eligibility. Second piece is really documentation and what SBA in a normal circumstance requires. Again, some of this is going to be changed, but this is as it stands right now. So the first thing is that you should be pulling down what is the disaster application form. It's called Form 5. If you go on to if you just Google up SBA Form 5, you'll get a copy of it. And you're going to have your clients apply online with their electronic loan application, the SBA electronic loan application, which is really the online version of Form 5. But you want to go online and pull down that form so you can have for your client an ability to kind of go through that so they know what exactly is expected. So you can help them kind of, if you will, put a draft together of that. So that's the first piece. They also currently expect that they're going to fill out a 4506T, which allows IRS to provide a transcript to SBA to look at. The next slide probably says you need to get tax returns. If you can skip to the next slide, Susan.
I believe
okay.
We took it out, Mark.
We already
because,
took it out. Okay.
Yeah.
So one of the changes in this environment is that they're not requiring tax returns to be submitted. In a normal circumstance, up till this week, they were requiring tax returns. So there's not a requirement to tax return, just the 4506T is what they do. And of course, that's the form that someone prepares to go to IRS that allows IRS to give SBA the transcripts of their tax returns.
So, Mark, are you saying that you think this 4506T will still be required?
I think that it might also not be required, but I think for the time being it currently is.
Okay.
So assume that it will be for the current time. Personal financial statements, there's a SBA Form 413 that's probably useful to use. You can find other ways to do it, but that's probably the easiest way. And it should be the case that anybody that owns 20% of the business or more should fill that out. And then it gets back to that earlier question about credit elsewhere. If you're filling out your personal financial statement and you show a significant amount of liquid cash, CDs or other things that could be easily seen as liquid, that would be where the call would be made about credit elsewhere. But generally, again, most of the clients that TA providers see won't have that problem, but they will need to put personal financial statements together, and frankly, they should have those anyway, just along with credit reports. And then as far as the schedule of liabilities and their status, it's something that's an important piece, because what we're trying to do here is trying to make an economic injury loan that really helps cover that business's liabilities and debts. So that information about what those debts are, what the current portion of those longer-term debts are, and what their status of the currency on those loans is something that's an important thing to do. And then, as Susan said, the tax returns right now are not required for this round of disaster. Future it might change, but currently, to streamline the process, the disaster office is not requiring tax returns.
Okay, and I'm looking at the Q&A, Mark. Can I ask you a question? It's going back to the cash flow and debt capacity question. With microlending, often we do a global cash analysis, including other forms of household income besides just the business, to determine cash flow viability. Does the SBA take into account other household income, or is it just looking at the business?
Yeah, it's a good question. I think on the really small loans, they probably are going to look at global cash flow, but I think for the most part, they're looking just at the business, because that's typically the way they approach this.
Okay, thank you.
So going further with the documentation, year-to-date P&Ls is something that someone should be preparing. Your client should have that, and you should help them prepare that. Again, probably the part of this is really that third point, is it's really most important to be able to show that the business before the disaster was breaking even or showing a profit, and that the disaster caused a revenue drop-off. And that's really where that year-to-date P&L, monthly if possible, can be done. That's where the SBA form can be used to show that loss information. The key to what you're trying to show here is that your business was viable, was profitable, was breaking even or better, and that the disaster put you into a situation where that is no longer the case. And that one of the fundamental pieces of the disaster program is demonstrating that there's a loss because of a disaster. So you don't want to be, and I'm saying this, I no longer work for SBA, so this is an official SBA position. You don't want your client to say, I'm losing money. You want your client to be able to say, I was breaking even or I was profitable, and then the disaster caused me to be in a situation where my business is running a deficit. So you really are not coming into SBA saying, I've been losing money and that's why I need a disaster loan. You need to come in and say, I was doing fine and then the disaster happened. Does that make sense?
Yeah, thanks, Mark. And another question that's come in, do you know if SBA will consider negative net worth clients?
It's really, negative net worth of the business in this case.
Well, of the personal,
yeah.
Well, it says personal. It could be business or personal, perhaps.
Yeah. It really is about the ability to handle debt, which is really a function of revenue and the ability to take on more debt. So if the business has a negative net worth, that's not necessarily something that would make them ineligible. There's a lot of debt that people can have, student loans and what have you, that put someone in that spot. That doesn't mean that they should not be able to be eligible. So I would say that I would not see that to be necessarily a problem. Necessarily.
Okay. Right. And one last question, if they have multiple businesses, can they do a disaster application for each business separately?
They roll together, and basically SBA looks at all the affiliates. So these are, if you have multiple businesses, they're all affiliated because you as the owner would have an affiliated ownership of all of those businesses. So SBA would look at them all because in a lot of cases, the impact on one could affect the ability for repayment on all of them. So SBA would look at it globally.
Okay. And then I'm throwing you a few questions as they roll in here. Will the SBA take a second position on collateral?
Yeah, jumping ahead on collateral. I think there's a screen on collateral that we had on that one. Like I said, SBA is saying we will take collateral. I would say for folks to understand that right now with the changes that right now we are not taking real estate collateral, and I'm expecting that the change will be that we are probably not going to take any collateral. So my sense on this would be that in a normal world, yes, SBA can take subordinated position, even if the real estate collateral, for example, was upside down, we would still be able to do that. But really the issue is that for the most part, I wouldn't focus too much on collateral right now. My expectation is that for this disaster, that's going to be streamlined out. They've already streamlined it to the point of saying we're not going to take real estate collateral, which takes a lot more time to document. So for the time being, I would say don't worry too much about the collateral issue when you're helping a client.
Okay, thanks, Mark. I think I went ahead and forwarded to the next slide.
Sure. I think this gets back to the point that I was making earlier, gathering information on the prior period sales, what the impact would be, and trying to make sure that it's clear that the disaster caused the problems that your business has. This is really, the important piece of this is that this is really only the mechanism that SBA uses to demonstrate the eligibility, not the amount to request for a loan. That's an important piece of it. It's what SBA defines as the loss. The loss in a disaster is what makes you eligible, that the disaster has a consequence that your business has suffered a loss. That is not what you're going to be requesting a loan for. That's just an eligibility threshold. So basically, if a business easy and obvious answers or examples would be things like if a restaurant had to be closed down because of the coronavirus, the loss that happens because of the imposed close down is the loss that you're looking at. But that doesn't mean that loss is what you would be borrowing against. That's a different piece. The first piece is really, can you demonstrate a loss, and that's what this does. Second piece, I guess, Susan, if you want to jump
sorry,
ahead.
I think I jumped, sorry.
Well, we're sort of skipped one, I think. One more back? Is there a... So the second piece is, what's the minimum necessary to keep your business in operation? So this is the need. SBA defines this as the need, not the loss. And on that, really what SBA is looking for is specific dollar amounts on the minimum necessary from the business's point of view to maintain operations until the circumstance returns to normal operation. A couple things on that. Who knows what normal operations will be impacted by and how long? I think we're generally telling people 6 to 9 months expectation to try to get a sense of that could be the period of time that this has been impacting on the business. But the first thing is really the minimum amount that's necessary to keep the operations open and operating. So what does it cost for your debt service obligations, for the salaries of employees, the fixed costs for utilities and other operating costs during the disaster period? And it can include owner draw, but it shouldn't be including profits. So if your business, what you're talking about here is what is the minimum necessary for you to keep that business in operation during the time that disaster is impacting on that business. And that's what SBA says is the need. So the first is the loss, the second is what's the need, and then the third slide, I think I really already referenced it, is really the capacity of the business to take on additional debt. So in some cases, businesses don't have a capacity based on their financials to take on more debt. And that even if there's a need, and even if there's demonstrated loss, if SBA can't see that the business has a capacity to take on more debt, they can't approve those loans. So you want to think through it that way. If you're a TA provider, you want to kind of, the first threshold is, have you lost money? The second is really, what does it take to keep you in operation? And then the third is, what's your capacity to take on more debt in order to keep your business in operation? So those three things are the kind of core of the way SBA disaster loans work. Now, a couple things to keep in mind. Disaster loans can go 30 years, and at 375, actually 275 for nonprofits, but 375 for a for-profit business, that turns out to be about $230 a month. So it's a really, really affordable product for people to take advantage of. There's a lot of other organizations out there, states, NGOs doing a lot of other kinds of lending that are really helpful in trying to reach people who are in circumstances of, economic distress here. It's really hard to compete with, $50,000 at $230 a month. So it's really something that you should be keeping in mind to your client, is that this is what the economic injury loan will give to them as an advantage. Now, the other thing about this is that currently there's a 12-month deferral of any payments on that. So any loans currently that are going to be approved will have a 12-month deferral before they have to start making those payments. So it's really a favorable thing from your client's point of view to take advantage of it. The loans are going to be made as working capital loans, and they go out usually in one disbursement. It's something that if the business fits this, you really want to start there. If you find that they're ineligible for some reason, and typically one of the logical things would be, do they have a green card, or are they otherwise documented? That's really what you would be looking to, some of the alternative other sources of lending other than SBA. But if they fit the SBA criteria, it really is a product that makes sense for them to kind of start with that and then work their way through other alternatives. Let's see. So quick summary. The loss, I think I covered this a little bit. The loss demonstrates the eligibility. The need is what the businesses need for basic survival, and capacity is the ability to take on additional debt. All three of those are something that the disaster loan officer is looking at. And I already mentioned the 12-month deferral period, and that the intent here is that this loan really is to keep the business in operation until things go back to normal. And so it's an undefined thing at this point in time. I think one of the things that's important for people to be aware of is that anybody that has had an impact because of the coronavirus that's impacting on their business, their clients, or their operation, they should submit an application online as soon as they can, as soon as they're able to. The reason for it is that the volume of cases coming in right now is sort of overwhelming. And I think that it makes sense for people to come into the process now. There's a variety of things that are going to, like we keep saying this, there's a variety of things that are coming in the legislation that will also add to the benefits that a client can take advantage of. But for the time being, they should not wait to see whether the impact has something that they can quantify completely. If they have a good idea of the circumstance, they should apply now. And then if the amount needs to be augmented, that's something that could be done down the road.
Okay, I think there's just one more kind of summary slide, which again, it's a little bit of a recap, but it's a way to just help people understand how to think about this product and this service from the SBA. Well,
one of the challenges on the economic injury loan is that from this is the normal economic injury circumstance, not this circumstance we're living with now, is that the business has to be strong enough to be able to take on more debt. In other words, you want to see a business that has been profitable and has enough capacity to take on more debt, but it can't be too strong and have too much in cash reserves. So they get turned down sometimes because there's credit elsewhere. They also can't be too weak and have existing credit problems, because then they get turned down for repayment and cash capacity. So it's in that band between the businesses that are fully able to take on more debt and those who are already showing that they can't take additional debt for their business within their existing or their pre-disaster revenue levels. So it's a tricky one as far as where the business fits. I think in this environment, you're going to see that window, if you will, between the too strong and too weak. That window is going to widen quite a bit. So more folks would fall into the category of being able to be approved, is my expectation from what I've understood. And then as far as time frames, right now what they're generally telling people is about a 30-day time frame for approval. I don't know if that's realistic given the understanding of how many people are applying online right now. I've heard that the online application has crashed because of the demand. So I think it's come up and down because there's so many people coming on to apply. So I think the 30-day time frame is something that I can't be sure that in a normal world that's the way it works. In this world, it's not a normal world. But that's generally what they're still telling people is about a 30-day time frame.
Yes, and I got a message from Heidi that said that the website does appear to be down and that they've created a Dropbox for people to fill out the forms and upload them. But maybe we'll have to figure out exactly what the process is while the SBA is developing more capacity on their website. Right.
Yeah, I would still suggest to people, it is the case that disaster tells folks that they can apply using the paper forms. I would discourage that. It just is not really going to be the best way to do it. So making sure that people use the online electronic loan application. If you go to the sba.gov/disaster, it'll lead you to the online application.
Okay. And we will definitely stick around for more questions, and just as we've said before, as information becomes available and verified, we threw this together in a couple days. We can easily do it again as the criteria for these loans change, please visit our resource page where we're just piling lots of stuff there for you and your clients. We've also just recently added some tip sheets from Credit Builders Alliance on helping clients manage their credit in times of disaster. And there's a link there to the website for COVID assistance for small businesses. And then the other resource, before we jump into questions, Mark, I just wanted to show people, we went ahead and created a spreadsheet just to help you as almost just a worksheet for you to, let me make this a little bigger, to where gray means if you can check the gray box, keep going, because you seem to, at this point, be meeting the disaster loan requirements on eligibility, on credit, cash capacity, security, public records, and then the documentation, approval criteria, and the timeline. And then we went ahead and also just did some amortization at the bottom that helps you see what different loan amounts are at 3.75% on 30 years. And if you take the new disaster loan, debt service, and add it to the pre-disaster monthly expenses and owner's draw, and if that gets you close to pre-disaster gross sales, it seems like you're meeting that cash capacity. You're getting in the ballpark of the cash capacity criteria. We just want to emphasize the caveat. This is a CAMEO tool. This is not an SBA approved tool, and it doesn't guarantee approval. It's just a worksheet we developed to help you as you're figuring out, working with clients to sort of see if they're in the ballpark of qualifying for a loan.
Susan, can you scroll up to the top of that worksheet and just explain
Sure.
that you said what the gray boxes and the white boxes, you went through that kind of quickly, what that means?
Okay, sure. What I did is I asked all the questions or the criteria here, and if you can check, if the check that you give to that answer, like do you live in California, and you can click yes, it means you're eligible. Now, as Mark said, it might be the entire United States, so this might be irrelevant, but are the annual sales less than 8 million? If you can click yes, as long as you're clicking the gray box, so sometimes the answer is yes and sometimes the answer is no, making sure is it's not a casino, cannabis, pawn, or porn business, click no. As long as you're clicking or checking the gray box, it means you're meeting the disaster loan criteria. Does that work?
That works, but then we also did say there was some caveats, right? Where like,
Right.
there were some caveats, like on the credit things, if you had a ding to your credit, as long as there's a workout going.
Correct. In other words, as Susan said, if you gray is good, and if that's not the case, then if there's a narrative that says explaining that circumstance, it's something that you would work with your client on. But as a kind of a quick screen, what we're trying to do is just a quick screen for folks. If it fits all of those, they're probably in a good spot to be able to apply, and in most cases would be fitting what SBA looks for. But if there's a problem, in other words, if it's one of the squares that doesn't hit gray, then you really do need to take a look at, well, what's the explanation for the circumstance? Sometimes the explanation that satisfies SBA and it's okay. Sometimes in a case of ineligible loans, like if it's a church, then it wouldn't be okay. But those are the cases that require more explanation because they are likely to be hung up in the SBA process.
Yes, and it looks like I have the wrong word, impact, instead of injury. So we'll edit this and clean it up a little and get it out to everybody. So let me see. Have we answered all the questions, Heidi? I'm looking back. I'm toggling between various screens here. So let's see. Are there more here?
No, yes, there's quite a few questions.
Can you go ahead and read some of them, Heidi? Because I'm
Sure. There's a bunch of questions about eligibility and being a startup. So let me address those because they're all kind of lumped together. If I was a startup and wasn't yet making a profit, but was on track with business plan projections, will they be able to get a loan? And they're related. Well, nonprofits that are just getting off the ground and don't have a financial history, will they still be eligible?
Probably not. In some cases, it depends. It's all these depend on, when you say a startup, does that mean you're starting it up at the beginning of this disaster period, or have you been in operation for less than a year and consider yourself still a startup? In some cases, it might be something that works, but generally the idea here is that you're really making the case that your business has had a level of operation, not as a startup, but as a level of operation, and then the disaster impacted on that. So if it is a case that a business has been in what banks think of as startups, I don't know how long, 2 years, sometimes longer. But from a bank's point of view, startups are businesses in the last 2 years. Really, realistically for this, if your business has been in operation for enough period of time that you can demonstrate the loss that you're having from the disaster, you would apply and make the case. In some cases, it might be satisfactory to SBA. In some cases, if you started your business, you opened your doors on February 1st when the disaster was declared, chances are that that wouldn't satisfy the criteria to show that your business had been in operation and has an economic injury because you hadn't actually been in operation yet. But again, I would suggest to everybody that these are case by case. Apply and have the call be made by SBA. Don't dissuade people.
Okay, there's some another question about eligibility. Can the applicant be an LLC owned that is owned by a C Corp?
When they start to get into those kinds of structures, best just to tell people to apply and let that be sorted out.
Okay.
Yeah.
What if 20% is unwilling to participate in the application, but the other 80% ownership is willing? Would that decline a loan, or should that business not apply for a loan?
Well, right now, I think that the case is the expectation is personal guarantees for 20% owners is the way that the program structure works. And that's the current scenario. I think that is likely to be adjusted from the CARES bill, but I would say that in normal circumstances, if somebody has a 20% ownership, just like in the regular 7A part of SBA, they're expected to guarantee the loan. But that may change as the CARES bill comes out. It may be the case that some of this does not require personal guarantees at all. But I would say for the time being, you should be still telling your clients that the expectation is personal guarantees from 20% or more owners.
Okay, and then here's another one. I don't think this is the right question. So are you saying that a company that was closed down under a mandatory order by the government, like a restaurant or a hotel, is declined for disaster loan? Is the government saying they should close down or they're expendable? I don't think that's, that's not really the question to ask. I think the government is saying they're declined for a disaster loan means the SBA can't fund them and they should seek funding elsewhere.
Yeah, I think it's a good point. If the businesses have had to close because in California people are told that they have to close and they don't qualify for an SBA disaster loan, I think that what CAMEO is going to try to do is really compile other information about other alternative sources that people can think about as far as sources of lending that could fit in if they don't qualify for an SBA disaster loan. My expectation is that SBA is going to be really aggressively trying to approve as much as they possibly can, but in some cases, there's just not an eligibility barrier that they can get past. So I think what we'll try to do is look at other alternative sources of lending that may fit in and be fine without the SBA criteria that might screen people out.
Yes. If a business has little resources but owner does, will they be rejected?
If the business, say that again, I'm sorry.
If the business has little resources but the owner has resources, will they be rejected?
In other words, if the owner has very significant net worth and the business doesn't show a lot of profitability or have assets in the business, would they be rejected? In a normal case, if I'm assuming that that's the way it's being asked, in a normal case, if there's significant net worth that the business owner has in liquid net worth that could fund the business for operations, that would be the case that fits, the credit elsewhere criteria that says there is credit elsewhere. Either they have means to do that, they have assets that they can put into the business. I think that in this case, again, that the probability is that the credit elsewhere test is going to be made either not used at all or just not really something that people should be aware of. So I would again say that should not be a criteria that TA providers should dissuade people from applying because of.
I think someone has their hand raised, but I can't see who you are in my thing. I'm gonna, oh, there you go. I'm gonna allow you to ask your question. Earl, you need to unmute yourself. Okay. We are going to, if a business owner has a DACA, no green card but work permit and social security number, are they eligible?
I would say you should apply and let that decision be made by SBA disaster people.
Okay. For FICO scores, where's the best place credit reporting agency for the client to get the most accurate info, or which reporting agency of type score does the SBA use? Look at. We don't post credit scores for our clients. I want to make sure they know their score. Operation Hope has informed me they can pull credit for free and doesn't ding your credit. So I will make sure that resource gets passed around. But Mark, if you want to answer the rest of the question.
Yeah, I think that people should be aware that they can get their credit report free, and that's something that they should be doing anyway. But as Heidi says, I think there are, if you're a TA provider, you really ought to have access to explaining how to pull credit for a client, because fundamental in every bit of your TA work with a new client is going to be what is your current financial circumstance, your personal financial statements, your credit report. Those are two things that are sort of starting points in a discussion about that business's ability to really pursue credit. So I think everybody should have an awareness of how to do that, how to get free credit reports, and let people know how to do that.
Yes, and I know Credit Karma is another place you can pull your credit report. And Heidi, on a different PowerPoint, I've got the government website for pulling credit too, and I can get that to everybody after this as a resource.
Okay, we'll do that. Will clients be required to share projections for 3 to 5 years? Should lenders help clients prepare projections?
They won't be required to do that. I think that, again, what you're really showing is it's not so much projections going forward, it's really the circumstance that shows that their prior time period was successful enough to be able to pay their bills and take on more debt, and that their current scenario shows losses, and that the expectation with the disaster loan, once things get back to normal, is that they can get back to normal sales levels and then be able to take on more debt. So if they want to talk about, this is actually a good question, if they want to talk about the fact that projections going forward showing growth and expectations of additional revenues, that's fine. But keep in mind that this is not a regular loan circumstance where you're trying to make the case that your business is going to be profitable and is going to be able to take on more debt. In this case, you're trying to make the case that your business was profitable or broke even, and now has been impacted by something that has kept that from continuing to be the case. So most everybody as a TA provider works with a client and says, don't go to a bank and tell a bank that I'm having a tough time and I need to get a loan, because that usually is not going to be a good way of approaching a lender. In this case, you are going to a lender, in this case SBA, because it's a direct loan, and you are saying that your business is having a problem. So it's a different approach that you typically would do when you're working with a client.
Okay, just so everybody knows, the site keeps crashing. You need to save often. If not, you get to start all over again. Took almost 2 hours for constant crashing. Thank you for that comment. The CAMEO worksheet indicates that revenues should be less than 8 million. However, SBA size standards allow for revenues above that amount depending on the industry. Are businesses that meet the SBA size standard with revenues above 8 million eligible or not eligible?
They are, and the reason I say that 8 million threshold is really for two reasons. That point is correct, that you can look at size standards if your business is more than 8 million. You should really look at the NAICS, the NAICS code, to see whether the type of business that is has a size standard larger than 8 million. But usually most businesses, in my experience, most businesses that are really being served by the TA providers are really at average annual sales of 8 million or less. And this can get very technical in certain circumstances of different types of businesses. It usually has more of an impact on the contracting side than it does on the microfinance or the small loan side. But it is the case that if your business does have annual sales of more than 8 million, you should really refer them back to the size standards that you can find on the SBA website.
Great. Okay. There's a couple of questions about how to estimate the loss if they're not sure how long they'll be shut down.
Mm-hmm. Yeah, that's a tricky one. I think I hate to say it this way, the easiest way is to assume that you'll have no revenue, and then that would be your expectation of loss in terms of revenue, and then what is your obligations that you are taking, that you continue to have, even if your business is not up and operating. So my sense would be that you would approach it from the point of view that says, if my business is shut down completely, and have no revenue, what would be the obligations that I needed to pay for rent, for mortgage, for utilities, for other debt that you carry for your employees? And what does it take to keep your employees paid? This is the amount that you would be trying to quantify. And from that, if you do have some revenue, for some reason that you are able to continue to operate, you would really want to subtract, if you will, the revenue that you do get from the obligations that you do have. But if you assume that people are, in many cases, being completely shut down, you'd start really with a zero revenue side, and an entire obligation side is what you're going to say is your loss.
And I think, again, that worksheet might help too, because the larger the loan, the greater the monthly debt service will be, even at these low rates and with deferrals. So whatever the amount is, it's got to be an amount that you think your client can eventually pay back, even if it's a 30-year term. So that's part of the equation as well. It's what you need and what could you take on reasonably once this is all over.
And
I'm sorry, Heidi. One thing to keep in mind is what you're doing is you're putting in an estimate of what you think this will be for a period that you think this will impact your business. So in some respects, everybody is understanding that there's no certainty to any of this. So the expectation that I would tell people is assume 6 to 9 months that you would not be in operation. If it turns out to be a year, then you would adjust the amount that you need going forward. If it turns out to be 3 months, then you can adjust it otherwise. But in some cases, it's probably just to start out as a starting point, just pick a period of time to say, here's my expectation of how long it will be before I can get up to normal, and then work backwards from that.
Great. Let's see. Just so everybody does know that we will be providing the worksheet as well as the slides and the recording, so you can go back and listen. And if you miss something, you can listen to it again. Okay, so there's a couple of other questions. That should be kind of quick. The maximum amount a loan that an agency can apply for?
Sure. $2 million is the maximum. There's not a minimum, but $2 million is the maximum.
I've got noise, so, okay. Let's see, and I've heard you cannot apply if you've had layoffs because of COVID. Is this correct?
No, you should apply. I think that references, again, the issue that relates back to the what's coming up in the CARE bill, But if your business has had to be shut down because of the impact of coronavirus, and you've had to lay off your staff, if you apply and say, this is in order for me to be able to keep that staff on board, this is what I would need to do and to be able to do that. So I would say that again, you would, if the intention is to call people back or to be able to carry them, then the idea would be that you would look to be borrowing it based on that. I think, again, the CARE bill is going to be overtaking a lot of this, and some of this will be to be paying people as borrowers, paying small businesses to be able to keep folks on staff with forgivable loans for payroll. I don't want to get too far into it because it's still a proposed bill, but the expectation is going to be that these are going to be that the payroll part, at least, is going to be forgivable for a period of time. So I don't want to get too far into the details on it, but it is the case. It doesn't mean that you shouldn't apply if you've had to lay people off.
A couple of questions on immigration. Find resources for undocumented people. We are working and looking for those resources ourselves, and we will share them with you. If there's anybody who has anything, you can please type those into chat, and we'll make sure those get out. And related is, how safe should people that have difficult immigrant status feel about disclosing information to the SBA? Will getting this type of loan be considered a public charge?
I can't really speak to that. I do think that if people feel as though that the issue of documentation is a problem that they think they will not qualify, I would not discourage people from applying, but that could be an issue. And there are places, like Heidi said, folks like Kiva and others who are able to make loans irrespective of documentation.
I know a lot of CDFIs are able to do that as well. So, well, this is a good one. Well, because I know the answer. Will SBA refinance? I'm becoming an expert in this loan program. Will SBA refinance existing higher interest debt as part of the SBA disaster loan?
And your answer?
No.
Okay.
At least that's what it was last week.
Right. Think of it the other way. In this case, what the disaster loan is looking to do is to cover the current portion of your long-term debt. So it would make payments on your debt during your period of time where your business is disrupted. So it's not refinancing your existing debt, but what it's doing is helping you keep current on your existing debt.
Okay. Let's see. Let's see. Are you going to tell what about the EIDL grant advance?
That's where the CARES bill is coming in. And so we should hold off on that until that gets finally executed and that happens. But there is a provision that says that the CARE bill is expecting to put some very immediate money in the hands of small business. And it's something in the 10,000 range is my understanding. But again, I don't want to get ahead of the signing of legislation, but that's my understanding is that will be the case. So that will be very quick is the expectation. In other words, SBA would get the money out to people very quickly for up to 10,000 with really no significant review of that. But let's hold off on that until it gets put into actual. Let's wait until it gets signed.
That could be next week's webinar. And also, as well as how the two products differ, I think we'll hold off on that as well, because I don't know if we have all the details yet. And if you do have the details, please just share them with us. I got a summary, but I haven't seen the whole entire text yet. So, but that was at 2 o'clock. So I know things are changing very quickly. What would you recommend? Would you recommend small business owners file themselves if they are able?
Recommend if they file themselves? I'm sorry, say
or
again?
I'm guessing, or with a with a provider, with a service provider, with a SBDC advisor, Women's Business Center staff, or something like that?
Well, my sense would be that, that TA providers do more than help somebody fill out an application for a disaster loan. You do so many other things to work with a client in understanding their circumstance and help really brainstorm with them how to best approach things. So there's a lot of value add that's more than applying for a disaster loan that TA providers actually contribute. So I think what the TA providers do is so much more than just filling out an application for a disaster loan, but it is one of the things that people do need to know how to do, and that's why we want to make sure that you know at least some of the basic approach of trying to assist them as they come to you.
Okay, and then now in more practical, going back to the expenses and loan amounts and all those kind of topics, if your business has independent contractors, can this be considered a payroll expense? That's
a good question. I would suggest that you would put that in as one of your operating expenses, just like you would have an operating expense, for other kind of fixed costs. I would put that in, even though they're not an employee. Again, you're going to want to put this forward, and then you see as the SBA reviews that whether or not that's considered to be a necessary part of your operation. If you're contracting out for someone to provide IT services for your business, then yeah, that's part of your normal operating costs that you would pay. So even though that's an independent contractor, it's still something that's a necessary operating cost for your business. So you would want to put those forward as part of your operating costs that you need as essential to your business.
Okay, couple of quick questions. I'm not sure if you can answer this, but somebody else who is on the line might be able to. Are the applications available in Spanish?
I think so. I don't know for certain, but I think so, yes.
We'll find out. Are funds able to be used for existing debt service? We just answered that, and the answer is no. Is there information available pertaining specifically to advising nonprofits seeking the loan? Does CAMEO have a worksheet addressing nonprofit considerations?
Good question. I don't think we do, but I don't think it's significantly different in the way that a nonprofit should approach this. The differences between a nonprofit and a for-profit business in this is that we didn't put it up, but nonprofits are 2.75% versus 3.75 right now. So there's a little bit of a difference there. Otherwise, there's really not conceptually a difference between them. And nonprofits that are running incubators or having significant activities that had to be canceled, or a variety of things that are revenue source that they as a nonprofit are facing, is just like a for-profit business in terms of the impact of being shut down. So if you're a nonprofit and the coronavirus has shut down some aspect of a revenue-generating aspect of your business, then you should be considering applying as well.
Okay, and are you saying the estimated loan amount would be lost sales for 6 to 9 months, plus any ongoing fixed costs that are actually incurred, like payroll or deferred, as in deferred debt service or lease obligations?
Yeah, pretty much, and include owner's draw, because that's part of what the expectation of the fixed obligations your business has that it pays. So it's really, what does it take to keep your business open and operating? The one piece of it that isn't going to be included in there is the profit that your business is expected to be able to make on continuing operations. So SBA will not make a loan to be covering your lost profits. It's really your lost revenue that they're looking to try to cover. I should say your operations is better put.
Right, and I'm looking at this question too, and remember the lost sales is how you become eligible, but to calculate the amount, it's more about the bare minimum you need just so that you don't go out of business and you have cash flow to cover it. So their sales are separate from just covering the minimal expenses, which is the loan amount. So I was just separating that.
Right. And one last piece along that line is that the amount that you're looking to borrow as the loss can't be more than the revenue that you would have had during that period of time. So you can't say, I'm looking to borrow $100,000 and I expected my business to generate $50,000 in revenue based on the pre-disaster time frame. So you can't borrow more than the revenue loss would be.
Okay, I think we might have gotten all the questions. Does somebody else want to, if we missed you, do you want to retype your question? Oh, here's one. What about chances for someone that has a weak credit record but fixed past issues?
I would say that those are the kind of cases that, the narrative that explains, why they had issues and what they've done to really resolve those is exactly what, makes the case to, for approval.
Great. Does anyone have any more questions? We'll stay on the line in case someone does for a few more minutes.
Right, and just a reminder, as soon as anything gets confirmed about new regulations for this program, we'll verify them and do another webinar and update our worksheet and get you that information.
And we'll also post it on, we have an SBA EIDL, Economic Injury Disaster Loan page on our website. We'll also upload any new things and we'll date it. So that should be helpful for you, and you can keep kind of bookmark that and keep referring to it. Susan, do you have any tying up questions or final remark?
I don't. I know this is a tough time for everybody, and I think I feel like at CAMEO we just want to show up on a regular basis to kind of work through all these questions and resources together, because it is fluid and it is unprecedented, and we're all figuring it out together. And CAMEO, I think, is doing a really good job of tracking down resources and getting answers as quickly as possible. So we hope to just keep meeting you online this way.
And I will pop a link into chat, and we'll also send it out in the follow-up email. You're going to have to give us at least 24 hours, if not a little bit more, to download the recording, get it up to our website and everything like that. But I am popping a link to all our resources, which includes where to send your clients if it's not you that will be doing the business assistance or consulting. There's some links on there to help find someone who can, and referral partners. Let's see, there is one more question that we didn't answer that was way back in the beginning, and I'm going to try and get to this before we end. Sorry about that. A client tried to register at the SBA disaster loan portal, was not able to complete the registration. The system generated a message stating not verified. He recently naturalized in 2019, currently has a SBA, I believe that's Community Advantage loan, under his old name. Does it make a difference if he uses his new or old name? We tried with the new and old names, the system still not be able to verify. I think we're going to have to send that to SBA district office to maybe help tease that out. Is that right?
I think you probably sort it out that way. If this person has an SBA existing loan, that means they probably meet the eligibility as far as citizenship or green card or whatever the case might be that applies in this case. But yeah, I think that would be the best thing to do, is to reach out to the district office. The district office in this case, San Francisco or any other of the California, 6 California SBA offices are all trying to be able to answer individual questions. My understanding is that the SBA helpline, if you will, is just being crashed with the demand. So I would call the local SBA district office, and they all feel that this is, their high priority of what they're working on is to help clients with issues around the coronavirus. So I would call the district office.
And people are.
One last piece of this too is that if they have an SBA Community Advantage loan, that means they have a Community Advantage lender out there that's a CDFI or another partner with SBA. And going back to that, CDFI is also another option too, because that's likely to be a source to be able to sort out the issue.
There was another question here that said, can we ask CBA if they have their tip sheets in Spanish? And yes, we can ask them that question and get back to you. If they're available in Spanish, we'll put them up on our resource page.
Then there's one more in the Q&A box. If a 20% owner has poor credit, say 550, will that impact a business that otherwise has credit scores 680 for the other 80% ownership?
It shouldn't be a problem. It's really about the 20% owner issue is really about guarantees. They're not making a loan to that. They're making a loan to the business. So if the business is able to handle the credit, then that will be fine. If the individual that's one of the 20% owners has weak credit, it's offset by the other owners, but it's really a loan to the business. So I wouldn't worry too much about that. And again, the credit scores are really kind of a threshold of discussion, but it's not really something that disqualifies people unless it's really, really poor credit with serious bankruptcies that are very recent that are issues there. But I would say in the case you're describing, that should not be a problem.
All right. Pending litigation, including divorce, are they ineligible?
No, that would be, that's not, if there's litigation about that shuts down the business, that's a different story. If it shuts down a marriage, that's a different thing.
So apply if you're getting a
absolutely.
divorce and you have a business.
Sorry.
Yep. I like to answer in the positive sometimes. We need, oh, you know what? We should have ended this webinar with a picture of a cute dog, but
I know.
a puppy.
Oh, I
Anyway.
have, well, okay, next time.
Next
I've got
time.
a cute dog.
If you all, we'll stay here, we'll stay on for another few minutes, but feel free to drop off. Obviously, I can't believe, I applaud you all for your attention and your diligence and your service and for the small business community. I know you're all working really, really hard to serve our businesses, and hearing stories that are tough. And we think, so we'll be on for another couple minutes, but if you want to go, I'm going to close out now and stop the closing type of language, but we really, really appreciate you. And we will be holding these webinars as necessary. If you have a topic, like something that you want to understand better, let us know. We'll see what we can do to get the right people on to answer the questions. So everything will be emailed, the recording, the link, the worksheets. We'll email you everything, as well as put it up on our page, the SBA Disaster Loan Program resources page that I popped into chat. So we'll stay on for another couple minutes, but I am going to end formally and answer a couple more questions that are in chat.
Yeah, and
so,
if you're getting, and if the folks, for the folks that are dropping off, I think that.
I don't know who that is.
Not sure what that is, but that may be the alarm that says we all have to drop off.
Maybe.
I'll let you make that call.
Susan, can you mute us? Or can you mute you?
Mute myself?
Yeah. I can't. Everybody should be muted. Ooh. All right, everybody. I think that's the alarm. We'll answer the other question. There's one more question. Oh, including ADA-related lawsuits against the business.
I wouldn't worry about that. I would submit anyway.
Submit anyway.
Yeah.
Submit anyway. Okay, great. Everybody, on that note, let's all go have dinner and have an evening. Thank you again for your service and for your interest.
All right, take
let's
care,
take it
folks.
away.
Bye-bye.
All right, bye-bye.
Hi, everyone.